Last month, Argentina announced that they would start paying for imports using the Chinese yuan due to their shortage of dollars. And Brazil followed suit, announcing that it will allow companies to trade in yuan as well.
Ever since Donald Trump came back to the White House, people keep talking about one big question. Is the US dollar's time as the world's top currency finally ending? One obvious replacement could be China's yuan. After all, China is the world's biggest seller of products. Everyone wants to buy Chinese stuff. And guess what? You buy Chinese stuff with yuan. So why wouldn't countries want to use it? But here's the thing. Despite China trying really hard for years, the yuan hasn't really taken over. The dollar is still king. However, something interesting started happening in the past few years. The yuan suddenly became way more popular. More and more countries started using China's payment systems. So in this video, we're going to look at China's decades-long project to make the yuan global, why it didn't work before, and whether things are finally changing.
China's yuan has swung back into the global spotlight. The last time the market was this concerned about the Chinese yuan was in August of 2015 when China devalued its currency, sparking a global market sell-off. And this year, the yuan has come under renewed selling pressure.
Why nobody wanted the yuan before? Let's start with the basics. For a long time, there's been a weird mismatch. China plays a massive role in world trade, but its currency plays a tiny role in world finance. China became the world's biggest exporter in 2009. By 2013, it was the world's biggest overall goods trader. You'd think, with everyone buying Chinese products, the yuan would be super popular, but it wasn't. Until recently, hardly anyone outside China used yuan. Even inside China, lots of companies used foreign money, especially US dollars, to do business and borrow money. The main reason? China has what experts call capital controls. These are rules that restrict money coming in or out of China. Investors got nervous. They worried, can I actually use my money in China? Can I get it out when I want to? For most of the 1990s and 2000s, China's government didn't really care that the yuan wasn't popular. Sure, they ended up with lots of dollars, but they just bought US government bonds with them. Plus, keeping the yuan unpopular made it easier for China to control its value and keep Chinese products cheap for foreigners to buy. China's first big push to make yuan global. But in the 2010s, China decided things needed to change. They had two main reasons. First, the 2008 financial crisis scared them. They realized depending too much on dollars and the US financial system was risky. Second, America started using money as a weapon. After September 11, 2001, the US created powerful laws that let them punish other countries by cutting them off from the dollar system. China worried these punishments might target them someday, so they wanted to build an alternative. China did three big things to make the yuan more popular. First, they offered lots of yuan loans to foreign countries, often as part of their massive Belt and Road Initiative, building projects around the world. They also helped foreign companies borrow yuan money both inside and outside China. Second, China's central bank created special agreements called swap lines with over 30 countries, including the European Union and the United Kingdom. These let other central banks trade their money for yuan at a fixed rate, so they wouldn't worry about the value changing. Third, and maybe most important, China built what experts call financial plumbing. Think of it like this. Money needs pipes to flow through, just like water. China built a network of banks for yuan transactions. They created something called CHIPS, the Cross-Border Interbank Payment System, which is basically China's version of SWIFT, the system most of the world uses to send money internationally. They even started working on digital currency projects to make cross-border payments easier. Why it didn't really work. Unfortunately for China, this first big push didn't work very well. The swap lines barely got used. The yuan stayed unpopular outside China. Its share of global reserves stayed below 3%. Several things went wrong. Those capital controls still made people nervous. Also, The euro became another alternative to the dollar in the 2000s. And here's the kicker. The 2008 crisis actually made the dollar stronger, not weaker. The US economy recovered faster than most others, and America's Federal Reserve showed it would help other countries' banks, which made everyone want to keep using dollars. Why things are suddenly changing. But something interesting started happening in the past few years. The yuan suddenly got way more popular. The numbers tell an amazing story. Yuan loans to other countries more than tripled since 2022, and now make up nearly half of all Chinese overseas lending. About 7% of all global trade now happens in yuan, up from just 2% in 2022. And that CIPS payment system we mentioned? In 2024, it processed 175 trillion yuan worth of trade, more than double what it handled in 2022. A decade ago, it handled zero. So what changed? Why is the yuan suddenly so much more popular? There are two main reasons, and experts call them push and pull factors. China pulled other countries toward using yuan by loosening those capital controls and expanding their payment systems. CIPS is now rolling out across Africa, the Middle East, and Central Asia. More than 1,683 banks are signed up now, compared to about 1,300 in 2022. That's growth of nearly 30%. But America is also pushing countries away from the dollar toward the yuan. This is happening for two reasons. First, Trump's unusual economic policies, including his willingness to pressure the Federal Reserve and impose massive tariffs. In April 2025, Trump slapped 104% tariffs on Chinese goods, and the yuan fell to a 17-year low. Second, America keeps using financial sanctions against other countries, like the recent ones on Russia's big oil companies after they invaded Ukraine. This makes other countries nervous about depending too much on dollars. What does this mean? Let's be clear, the yuan is not yet a rival to the dollar. It still accounts for way less of global transactions and reserves. The dollar made up 58% of global reserves in 2024, while the yuan was only around 2%. But the explosive rise in yuan transactions and cross-border payments suggests something economists call network effects is kicking in. It's like social media. Because more people use it, it becomes more attractive. So even more people use it, and so on. This is the same reason the dollar has stayed on top for so long. Everyone already uses dollars, so everyone else uses dollars because it's easier. While it's hard to see the yuan replacing the dollar anytime soon, if this trend continues, it might offer a real alternative in a future where multiple currencies compete for the top spot. In 2023, the yuan actually passed the euro to become the world's second-largest trade finance currency. A 2025 Bank of China report found that 77% of businesses in Southeast Asian countries now prefer yuan financing when trading with China. And when dollars and euros become harder to get, nearly 80% of international companies said they turn to Chinese currency as a backup. The numbers are impressive. In 2024, cross-border yuan transactions reached 64 trillion yuan, up 23% from the year before. The yuan's share in global foreign exchange markets rose to 8.5% in 2025, higher than the Swiss franc but still way behind the dollar's 89.2%. The bottom line: China's project to make the yuan global has been going on for decades. For most of that time, it didn't really work. But in the past few years, something changed. Whether it's America pushing countries away with tariffs and sanctions, or China pulling them in with better payment systems and looser rules, the yuan is definitely becoming more popular. The dollar isn't going anywhere anytime soon, but the yuan's rise suggests the world might be moving toward a future where multiple currencies compete, rather than one currency ruling them all. And that could change everything about how the global economy works. Thanks for watching. If you found this interesting, make sure to like and subscribe for more content breaking down complex global trends in simple terms.